Simplicity is hard to build, easy to use, and hard to charge for. Complexity is easy to build, hard to use, and easy to charge for. Chris Sacca. My friends, we do it all as simply as we possibly can. We have honed this down over years of practice, and those of you who've been with us for those many years, you know how well this works. We want you to practice trade with us, learn how to do this by doing this. Doesn't cost you anything to practice trade. Let's talk about this crazy market today. I'm starting off unlike I typically do. I'm showing you actually not the largest chart, but I'm showing you the half-day chart. And you can see where things bumped up in the morning and then pounded down in the afternoon, actually have a negative 15. That means that, of course, everything is going down. 10 points from the weekly heading down, 4 points from the 2-day, and we went red in the afternoon on the half-day. So again, markets just churning around. I heard one trader yesterday talking about just how much it is like a washing machine trying to trade out there. So again, if you're struggling, hey, markets are tough right now. It is a bit crazy. The world is crazy. And of course, summertime trading zone, welcome. You've heard that adage, sell in May and go away, live to trade another day. It doesn't get any easier, but that's okay. It's great to practice in the worst of times. That way, when you get into that fall-winter trading zone and it's just smooth and beautiful, you will feel like a master. So stick with it. Don't give up. Keep practicing. You can do this, and it's fun along the way. I enjoy it even on crappy days where it is difficult. Now, let's jump in first on the weekly chart. I'll smooth this out a little bit for you. You can tell that we are well above the 200 EMA. That's that golden line below. And what do we see? Well, we see where the market topped off most recently the week of the 28th of March and then slowly started devolving. Got a red spinning top right now. Lots of indecision tending down. And again, we can see that we've continued to trend lower over these last 3 weeks, down for the day 1.50%. The NASDAQ even more, 2.07%. So you can imagine how much bleeding occurred across the board. We go to the 2-day, and of course you noted the STC was red. Look at what happened to the 2-day here over the last few days. It's gone red also. That is a green spinning top right now, but that 2-day chart also turned red on us. So of course that's 10 negative points. And then the bright spot was the half day was moving up and then collapsed in the afternoon, dropped right below the 200 EMA and gave us a 15-4-hour down move. Now, do keep in mind, as we have said, as we look at things, we are still above the 200 EMA when it comes to that weekly chart. It is red, and we are counting that as red. We look at the 2-day chart, and of course you can see where we are above the EMA there. The only thing that's dropped below it is that half-day chart. So again, we're still above that, but trending down on both the intermediate, that's the 2-day, and the long-term chart, that is our weekly. So let's go back to the weekly chart and start with the NASDAQ 100 in our analysis. You can, of course, see on the NASDAQ 100, we're also above the 200. But again, two strong down candles. Been red for a while on the NASDAQ and lots of down movement. Like I just said a minute ago, we're down 2.07% for the day. Check out the 2-day chart. Again, just continuing to trend on down strongly. And again, where are we there? Well, we're red on the 2-day, we're red on the weekly, and we go to the half day, and we have been red there for a while. We've been at a negative 15 for a while, and again, just continuing to trend down. You can see where we did a practice trade back when things crossed over. We're only 11 at that point, and of course, how did that do for us? Did quite nicely. We had a 4.32% return on that little short-term trade. I will tell you guys, as I have analyzed using the STC, and as we've talked more about these short chart trades, which haven't been our forte for quite a while, the reason we've been talking about it is because of all this market volatility, and we've just been looking at those and tracking them, and we have found over and over again, when they work, it's very clear they're going to work. It goes red, you've got lots of downward potential. It stays red both in the candlesticks and on the STC for down moves, and the opposite is true for up moves. You either get strong surging movement. If you start getting a lot of bouncing around, then it can get very hard and nasty on you quite quick, particularly this time of year, particularly as we move into the summertime trading zone. You might say, Tom, why is the summertime trading zone historically a bad time to trade? Lack of volume. And when you don't have a lot of volume, if you think about how easy it is to spill water out of a cup versus out of a big, deep swimming pool. Cup, it'll slosh all over the place. But to get a lot of water to come out of that pool, it is much, much harder. You can empty the cup right away. So again, the volatility makes it very easy for a few people in the market to be able to, well, the lack of volume makes the volatility very easy to have a few people really affect the market. That's where you can get that herky-jerky motion. So just keep that in mind as we move into the summertime trading zone, and you wonder why life gets hard. But again, encourage you to continue practicing. Let's move on to bonds. And the story on bonds is a red one. Things just continue to hammer on down on bonds, down 0.74%. Of course, we're a negative 15 here. We've had a red STC for quite a while, but of course, if you were shorting, and I do encourage you to look on your charts and see how nice these weekly vertical crossovers are with the STC. Where is the big money? Well, the big money's in the big charts, my friends. You can use this weekly for a jumping in point, and of course you can use that 2-day for helping you find easier places to jump out rather than standing there waiting to lose everything for the weekly to roll over. So again, if you're a big chart trader, we've taught on this for years. Again, stick with us, work hard, you'll figure this out. Now, that is where we are on the weekly. We look at the 2-day and not hitting the lower low that we saw over the prior 2-day candle from the 18th, but again, a red down candle. And of course, we continue to see the STC quite negative. Where are we when it comes to the half day? Well, we had, again, another initiation into a down move when things popped over in the afternoon. So, quite nice. Of course, we're below the 200 EMA. We've got everything stacked up. Went from a 14 back to a 15 today. So, again, another potential initiation point for going short on bonds. Not telling you to have to do that, but again, practicing these things, you will learn so much from doing it. I encourage you to practice it. I encourage you to use the little measurement tool over here, the long position or the short position, to lay those out. We have a great teaching on how to use it. One of the latest teachings that we put out, I'll in fact put it at the end of today's video for you. So let's keep moving. We're going to go now to gold. What is up with gold? Well, gold was down for the day. As we look at the weekly chart, we can see that gold is still holding on to a green STC, and we have a green spinning top for the week. Now we go on to the 2-day, and a little bit of a different story. This latest 2-day is pulling away from that, taking us from a 14 automatically to an 11, even before we get to see what the number is for the short chart. But we do see a red down candle forming, and we look at the half-day chart, and of course it has been red for a while. So what does that bring us to? Well, it brings us to, on gold, a new designator of nothing but a 10. We do have the weekly chart still heading up, still solid green. Of course, as that begins to wear down, if indeed it does, and crossover going down, that would initiate again a nice potential long-term short position in gold, but we'll wait, watch, and see on that one. Now, lastly, we're back at the weekly chart. Let's look at what's going on with Bitcoin. Bitcoin is in the red on the weekly chart, down candle, down just a little bit for the day, 0.05%. It gets more interesting as we get into Bitcoin. Check out what we see forming here with again, going from red to green on the 2-day. That is nice to see. I mean, it's been red here for a while for it to be pumping over, going up. Is Bitcoin going to get some legs and move up? Don't know that that's going to happen, but many times you see it initiated on those two smaller charts. Starts first, typically, with the half day, which we see where things bumped up nice in the morning. That bled most of that off in the afternoon on Thursday, but it was good to see that happen, and it was enough movement to kick over the 2-day. So let's see if there's any legs to what we see happening in Bitcoin. I would love to see that take off. I'm ready for Bitcoin to move, just as much as I'm ready for gold to move, and we'll let these charts lead us in the right direction. Hey, Patreon members, don't forget, we will be sending out the 20 weekly, we'll be looking for 20 weekly vertical crossovers for you. I'm very interested to see how those shape up. I haven't taken a look at the list yet, but it's going to be interesting with all of this up and down washboard movement. I'm interested to see how many we can find you in each direction. It'll be coming out soon. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.